All right, we're live.
Hey, good morning, everybody. It is August 9th, 8:03 Central. Hope you're all doing well. Hope you had a decent day yesterday, and hope you had a nice evening. Anyway, you're looking at the SP 500 futures chart right in front of you, and you will only see one big horizontal line in the sand there. The and that line is basis kind of pegged off of a low volume a big low volume node around the starting at about the 25, 53.25 to 53.28 area. That was the level I kept on shorting, and you saw it. And I knew we were talking about all the put selling and the potential for higher. I knew that. But what I also knew is because of that big low volume node, there was going to be a ton of premium that was going to be drained with everybody pursuing even higher. And that was just based on just experience and my gut feel. Trading that range right there down to 53.08 or whatever. There's very few times I talk about P&L. I mentioned I had a decent day the other day, but I'm going to tell you point blank. I picked up about 700 ES points trading this little range yesterday. It started from 9:15 and it proceeded all the way till right at noon before it made it a move higher. When you get big low volume nodes, and we had already had a 100 to 125 point move, it was worth the risk to short that until it said, hey, it's no longer a resistance. I like the prices up here. I like the prices. And then it finally moved higher into this upper profile back from Tuesday. I mean, it was late, yeah, on Tuesday. Let's see here, on Wednesday, and then we sold off. And I still knew there was a potential that for us to go trade back up to the 52, 57 area. But just an initial move toward that low volume node after rallying from the morning lows of 51.80, and we're at 5,300. That was 127 points right there. And then it proceeds to go, another 20. So then it was another 140 points. That was off of the pre-market lows. Wednesday night. That's the Globex low. So that's actually Wednesday evening. So I thought that that was a really good place. That we were probably it was probably going to take a lot of effort for the market to auction there and then to potentially go higher. I was not looking at puts here. I was simply trading what I perceived was going to be a trapped range. And it proved itself, and that experience just gave me the confidence to keep shorting that area. And I kept just taking, eight, geez, I mean, you guys can all do the math yourself. I mean, the best one I had was probably 10, 17, probably 19 points out of that area. But on average, I was taking 10 points on average out of every single trade. So there lies the benefit of knowledge. There lies the benefit of homework, of just knowing what to look for. So, and also combining the knowledge and intuition off of we've already rallied how much. How much further can we go? How much more gas is in the tank? So I definitely was capitalizing and leaning on that. How much fuel is left in the tank thesis. I definitely was doing that. And finally, I got stopped, and I reversed long and took it all the way into the 53.30, from the long slide. And then I sat and waited, and I was waiting for the 52.57 area to go into puts, because it seemed very logical that if we're up this much, there's going to be some sort of cough up, some sort of reversion to the mean, some sort of give back toward the end of the day. And 90% of the time, that is the case. The best. So I started putting those puts on right around the 51, 52 area, and picked up a double. I was able to scale, so now I have plenty of room for it to maneuver. And it did eventually pop up to the 57, 50, 60 area, but it popped up probably about the 55 area is what you're seeing here, and then it finally gave up about 30 points, and then there was the potential for a long there, or about 20 points really, no, 30 points. There was potential for a long there to go retest that 27, 28 area, which made sense, and that was the area where I exited the puts because I knew that the top of that range was such solid resistance for how long, half of the day. I knew there was potential for that to be support. I wasn't really expecting. I knew that if we got back into this range, we could come down and test the 53 even, 5308 area, but I wasn't necessarily looking for some massive breakdown, back to 5275. I wasn't looking for something like that. So, so I got a little chopped up on the puts in the beginning, and then they eventually worked, and that was fine. All right, so whatever. So that was me. That was my trade. Who gives a shit, right? So overnight, we got up to 53.70, 71. That's where we got to. We've now come off about 50 points from that area. So, okay, so there's already a little move there. The longer that we hang out and we stay above this 26, 27 area, we're going to be providing fuel for higher to get up into this area, right up in here, right toward 54.50. So just keep that in mind. The longer we hang out here, we're going to be burning theta, refueling the opportunity to go higher. It doesn't mean it will happen, but the longer we hang out above here, there's increased odds that's exactly what's going to happen. Um, any breakdown below 53 even to 5304 will bring us back into, will bring us back down in here. And you notice that this is still a very low, this is a low volume area that we kind of skipped through, but we traded pretty well the last couple of days. So the market may have just done its job. So unless we have any further negative news, anything going on, with military conflicts, there's potential that we could trade higher up to back up to this 54.50 area. So I'm simply identifying what the possibilities are. I don't know. ES is currently down. We're down 13 points on the day. So that would mean, let's see, let's go to SPX. Now you're looking at just the SPX. I'm going to remove all the drawings. We need to see a clearer view where we're at. So now you can see with SPX, you can see the significance of this 53.20 area here in terms of like basically putting a lid on it for higher. So that right in here. And now the 52.83, according to SPX, a breakdown below 52.83 can bring us back down in this area for a potential for a gap fill. So it's interesting. When I go from a futures chart to the SPX chart, I actually can refine my thesis. I can sometimes just change my thought, period. So we're down 9. Let's see, we're down 13. So we close at 19. So we are opening right around the 53.06 area. Okay. So we basically are opening right in. We are opening right in here. So that's going to be right in the middle of the range from yesterday. Basically, that's right in here. Right in here. But we're going to be opening right in there. So you don't chasing gaps, fading gaps are dangerous. Let the market shake out in the beginning and let it tell you. Okay. What I think would happen, because we would have this gap down in here, there's potential to trade down to SPX 52.83 area, and the spread is about 26.50. So you just now I'm starting to refine my numbers. So the 52.83, so 20, so that's 53.03. in the 6th. That gets me to about 53.0809 in the ES. Well, that was the bottom of the one range I was just bringing up. If we trade below this area down to 53 even, we can now go and we can see some of the downside here. Um, we're going to open gap down. Be careful on that because we could easily go to this area right away and then have some sort of bounce back and possibly fill a gap and retest the highs from yesterday. So this is just the range on the SPX. So hopefully by me showing you this and taking most of the drawings off, you have a clear picture just looking at the SPX, and then you do a quick incorporation of where did the ES, where did it visit overnight? What was it doing? And to give you some sort of tell. And I will discuss NDX at the open. I still want to go through that and see how that's doing. That's obviously NQ is down 75 points. That's probably going to open in its in its kind of correlating range, and right in the middle. So we'll see. All right, so there you go. You got two possibilities. So just be patient out of the gate and let let's let price tell us what we want to do here. And with that, I will hand it over to Dan. I'm sure he's got some thoughts on that.
Morning.
Good morning.
Little different thinking from me going into today. So, see a couple of things, and let's go to the 30-minute. Sort of had this sort of smooth like W shape that he likes. Now we're sort of in a little bit of a bull flag, right? Did it break here? And break down. That's sort of a rough drawing, but not so sure. We'll have to see. But we broke below this area here of this 30-31, and we got down to even below what would have been the equivalent of SPX 5300. Now SPX 5300, sort of that put wall area, that's going to have some option support there inherently. The normal thinking is you long sort of put wall areas, you short call wall areas. My hesitancy in that today is we didn't void anything to the upside yet. So in all the bullish sort of bottom is in stuff you're seeing on Twitter, we just came, the gap from the gap down Sunday was at 53, 58, 59. What did we get to overnight? We got to, was that 72? So we got 14 points above it. Immediately failed and came back into it. I haven't really seen any stocks individually break out and reclaim areas. NVIDIA 106, 107 was always that area we were watching here. Sort of this area here. Keeps rejecting that area too. That's a big one. My sort of thinking is I'm not all that comfortable with the theory that we're going higher yet, because we didn't even see the VIX get to lows from Wednesday. Was that right? Wednesday? So yesterday was an up day. It must have been Wednesday, but we haven't seen the VIX break down into the 22 area. I mean, it closed yesterday at 23.94. So my thinking is, if we showed we wanted to break out and get back up into this range and maybe go test this longer term trend line, which was up here. Go back to 4 hour, you can see sort of that longer term trend line all the way back from October. zooming out really helps. We haven't shown anything, and let's actually even go back to the 4 hour, that shows me that we want to go higher yet. My gut tells me that we're going lower, and we're probably going to take out in the next week or so this low here. And I mean, 4 hour, you've got a bearish engulfing here. You sort of had resistance, snuck through, and you can see it on different time frames really well. Snuck through, immediately rejected, and came back below. That's why zooming out is really so important. So how do we play it here? It's Friday. It's been a really good week. You don't have to, is sort of one answer. You don't have to trade it. I think the easier trade than futures, because I think there might be a lot of slippery levels in futures, might be options. And you could play that with something for next week, or to give yourself a little bit more time than 0-day options with a high VIX, because any selling of the VIX, so say you wanted to play downside, any selling of the VIX is going to accelerate your theta into lunchtime. So I would be careful on shorter term 1-day, 2-day stuff because of that. So today, protect yourself, protect the money that was made this week. Don't get over your skis. Smaller sizing still, those rules still apply. We have VIX over 20. So you're going to get swings, you're going to get stop hunts, you're going to get stuff that is meant to trip you up. That's sort of the inherent nature of, and I'm not going to say it's a bear market now, but it's trading like a bear market. And the inherent nature of a bear market and why people don't like them is they're full of traps. They don't trade normally. They trade in a way that is counterintuitive. And we're trading like we're in a bear market right now, to be honest, with these wide whippy swings and death candles, and then sort of unbelievable 100-point rips. So it's a tough trade right now. And final thought is protect the account, protect the money that was made. Either stay out or stay small, and keep the money in your account and not give it back to the market. Have a great weekend.
Good morning. All right. Let's see where we're at. So, as I shared multiple times this week, we've kind of been within this structure on the 4 hour, which is still holding together. So we are still within this sort of pattern, expecting this to continue until, I'd say we sort of break this 38 Fibonacci, which is right around ES 5300. So we still have room on the downside and still remain supportive within this structure. And then obviously breaking over the 5360 Fibonacci, which we did briefly overnight. And then if we can get over these levels, we'll be targeting the 61.8 here at 54.17 and a quarter. That's a huge level, so definitely mark that off if we do rally today. 54.17. I know that's quite a bit higher than where we're at now. Not saying I'm expecting that, but if we do get a rally, just have that on the chart. And that's 54.17 and a quarter. And then really the 5360. 50 is your 50 Fibonacci, which is sort of an immediate resistance, and then below here you've got your 5303.75. Those are the sort of three major fib levels. And going over to a kind of a smaller time frame is actually, let me pull it up over here. Let me go into the 15-minute here. within that larger harmonic, we did have this yesterday. This was not a harmonic because, I'll tell you why. If we take our measuring tool and put up the high here, this number here, the 0.324, this needs to be a 0.38 minimum, so it had to be kind of up in this zone. Oh, I've got my magnet on, that's why. This would have had to come up to here to qualify as a harmonic. So it's still kind of played out as a harmonic. They call it sort of, I mentioned, in the spirit of, but officially does not meet the measurement requirement for it. So, but we had the larger pattern that was really what was driving things higher, which is kept us kind of within this structure, but because it still, is playing out sort of as a harmonic, we expect this to be a bearish pattern, and we came up and we've sold off a little bit. If we start to get a sell-off, I would sort of take this level here and see if we've been supportive. We kind of have been supportive around this 23. I know there's a lot of lines coming into play. And then the 38 is down here, which kind of lines up with this cluster here that David was talking about, with that 5307.50 sort of, and up to 5332.75. So those levels that he shared kind of line up with those Fibonacci numbers. So that will be definitely an interesting area, and I have the line over here at 5309.50. So if we get back into this zone, I fully expect sort of this to come into play again, these two levels. And we did break below it here briefly. Now we're kind of trading back above. And the key pivot levels here, let me zoom out a little bit. So we do have a weekly pivot here at 5296.75. So there's a decent cluster there around 5300 that should be pretty supportive if we do come down there. And then on the upside, we have this big monthly pivot here at 5436, which would be just slightly above the 61.8. So a ton of resistance up there, so ton of confluence. So my 61.8 is right here, actually. I have it marked out. So definitely there's going to be a whole bunch of resistance if we do get up into here, whether that's today or next week. And then, and again, this real cluster of support down here. So right now we're just kind of trading within this range. Obviously, zooming in, you can find some good spots to get some longs and shorts. Overall, still within this bullish pattern. Again, if we come down and break below this 5300, then I would expect this to start really selling off. Some other things I'm looking at. Just noted, Expedia had good earnings. They gapping up pretty heavy. There may be an opportunity for this to sort of gap and go. I'll be watching that. If you're looking for stocks, ELF also sold off actually on good earnings, but I don't know if their guidance was bad or what happened, but their earnings were pretty decent. This has sort of a bullish pattern look to it. So there may be a little bit of a gap fill opportunity on this. If you go into the daily, you'll kind of see the gap there. And I did notice Bitcoin was coming up here against the 200-day and rejected. So we'll kind of watch that, see if that can sort of regroup and get above it. I always kind of keep an eye on coin next to it. I think that was pretty much it today. I didn't see a whole ton of actionable stuff. RTY rejected up here. It's kind of back within this zone. So we'll see how things kind of shape up for the day. If we start getting some weakness and we can get down below these levels, that would be an interesting one too. Butters just asked, will I be watching MSTR? MSTR might be a little bit more interesting to play on the equity side, and it might be interesting to keep an eye on those options because they were always really wild and spready. But now that they've split, maybe they get a little more reasonable and more liquid. But yeah, definitely makes MSTR a little easier to play, even on the equity side. I think that's about it. I don't know if there's anything else anybody wants me to take a look at. Throw it in the chat. Otherwise, I'll jump off.
Hey, just to reiterate, Dan touched on it. I did not, but I stated it in the room. Once again, Friday, Capital Preservation Friday. We've had an excellent week. There's just no need to participate in low probability trades when we've had a good week. You may be thinking that if I could take 5 to 10% up, I'm willing to risk. I don't just take 5 to 10% off and just like throw against the wall. It's got to be a good high probability setup. And if I don't see it, I'm not going to trade. I really don't care. And you shouldn't either. But I think with how we're positioned up here, I definitely think there's potential that we're going to get a trade's going to come about. So please be patient and just go right away to reduce size, because we still got a lot of really low volume in the DOM, and you've got to be prepared for just larger swings. So be patient and just be mindful of managing your risk, and you do that by adjusting the size. All right. Good luck to everybody.
Yeah, we'll see you in the room.